Hello, good morning, good afternoon, good evening, whatever time it is you guys happen to be listening, and welcome back to our 12th installment of the Winnipeg Market Watch podcast. I just wanted to start this episode by saying Denzel and I are both very excited to have been doing this now for a whole year. We're super excited for 2025 for a lot of reasons. And I wanted to say thank you to everybody who's been with us since episode one. Anything to add there, Denzel? Want to say hi to the listeners?
Yeah, that's right. I'm on camera now. Yeah, it's been an awesome year, and I can't believe that 12 months have gone by as fast as it did. I feel like we've just been nonstop for the entire year, and you know, we'll get into it when we start to talk and kind of go a little bit back and forth about kind of what's transpired this year. But you know, real estate is a business where it doesn't matter what time of year it is, it all feels the same if you're someone who's doing a lot, right?
Yeah.
The holidays just kind of go by and it's just go, go, go all the time. But
You
I'm looking forward for us to just kind of reflect this this episode. And yeah, I'd just like to also thank everybody for those of you who have been tuning in since the beginning. It means a lot to us. We know that we have a decent following and amount of people who listen, and your guys' support is much appreciated.
absolutely couldn't have said it better myself. And as you alluded to, real estate is a very interesting cyclical business because while people say, oh, the market gets busy in the spring and then it slows down in December, I think the theme of this episode is actually going to be maybe breaking down that stereotype a little bit and talking about just how if something traditionally goes a certain way, that doesn't mean that's how it's going to be all the time. And this particular November data dump I think is a huge exception to the rule when it comes to Winnipeg real estate. So, without further ado, I'm ready to break down the data. Are you ready to talk about all of the exciting news from November 2024, Denzel?
Oh yeah, and I think a lot of you guys are going to be pumped to hear kind of what's happening right now, and some of the numbers that we'll share with you guys should get you guys pretty excited for the next year. 2025 is going to be a good one.
Absolutely. So let's get right into it here. Talking about the benchmark price. November came in at 417,500, which is down slightly from the 418,100 we saw in October. But looking at the chart a little more closely, it's been now about 6 or 7 months where we've essentially had the benchmark price trade in the same 1% range approximately. That brings us to a year to date total gain of 9.9%. We fell month over month, negative 0.14%. We are still less than 1% away from the 2024 all time high. And pardon me, from the 2024 high, and we are 2.7% away from the all time high. With this price action in mind, it's really, really unusual to see homes selling in November for approximately the same price that they were selling for in April or May without any material pullback that you'd be able to quantifiably measure without a reasonable margin of error. Denzel, as somebody who's both a buyer and a seller of real estate, when you see price action like this, where we got to a high level and just plateaued, what's the first thing on your mind?
Well, I think it just goes to say that the market in Winnipeg is extremely resilient. In comparison to a lot of other cities in Canada, we have been, if not the most affordable city to move into, whether you're coming from the West Coast or the East Coast. And I think that um, when we hear a lot about uh, you know, crazy things happening both in the no, more notably, Toronto and Vancouver, it's we're kind of insulated from that Winnipeg, right? And I feel as if the pricing, especially in the past couple of years, with the amount of volatility, I guess you can call it, and uncertainty of which way the market is heading, it's very surprising to see that in November we're still holding strong because I think it was maybe 2023. around this time, or no, sorry, 2022 around this time, it was horrible. I remember
Mhm.
selling into the 2022 uh, November, and it was just miserable. I'm looking at the spreadsheets and I'm like, well, we're losing money,
Yeah.
and so now I've actually had we have a listing um, on market in St. Vital right now, and it's really busy. We're probably getting a request for showing maybe uh, every day. There's at least 3 or 4 showing requests since listing this past Thursday, and that's December, right? So just goes to show that the market's actually really, really healthy right now and hot. I'd actually consider it to be hot.
And so would I. We can
Yeah,
break down the data all we want, but at the end of the day, all you need to tell people is, hey, we're getting 20 plus showings on normal residential bungalow listings, first of all.
yeah,
And houses are selling with multiple offers. And we're basically fundamentally 2 weeks away from Christmas at the time of recording, December 7th.
yeah,
Um,
yeah,
Definitely not normal. But you guys listen to this because we break down the data, not because we talk to you with platitudes and generalities. So,
yeah,
as many of you know, November is usually, if not the quietest, among the bottom three in terms of activity overall in any given calendar year in Winnipeg. And the reasons for that vary. But this November, the activity was pretty difficult to ignore despite the seasonality that Winnipeg tends to see, we still saw a huge amount of resilience and strength. And I think that when you have a market that has activity like we saw, especially this late in the year, the way I described it in the article and the way I've been explaining it to clients, both buyers and sellers, is our market is acting a little bit like a powder keg, where the level of listings coming in are normal historically, but the overall supply is so much lower, and the price that is getting paid for a lot of these products on average is so high. In fact, the average price is above the all time high right now for homes purchased in Winnipeg at this present moment. When we get to January and the supply resets as a bunch of stuff expires on December 31st, which is very typical, and only limited numbers of new homes come to market, I fundamentally think that we are going to be in for an explosion in the early season where the buyer demand is already pent up and the volume of new sellers bringing property to market isn't exactly going to commensurately lift with that purchaser demand. So, with all this being said, when we see bidding wars in December, when we see most listings selling really quickly, and when we see very high showing volume late into the year, as an agent, that makes me fearful for working with buyers. And I'm telling my purchasers now, and if you're out there listening to this, anybody that's gone on a showing with me in the last 30 days, you'll know full well that I've said I expect things to get crazier next year. And while the pickings are slim now, more supply isn't necessarily promised until much later in the spring. And by then, who knows what's going to happen with the pricing. When it comes to sellers, I'm very excited. And if I'm dealing with anybody that has talked to me about listing a property in the last 30 to 60 days, we've outlined, and again, hi, if you're listening, we've outlined a comprehensive strategy about how to get you the most money and how to time this wave that we're going to ride through the spring as best as possible to put the most in your pocket. So, Denzel, as someone who's always on both sides of the table, um, not talking about the facts or the data, but just emotionally, what are you feeling as a real estate transactor?
First and foremost, I'm very excited. Um, I feel way more prepared in comparison to any other time in my career because obviously I kind of jumped into real estate at a time where it was ultra hot, and I guess it might have felt a little lucky at the time because I kind of got in just before people were going crazy over real estate in 2021 and 2022. But now that I'm, a lot more in tune with the market, especially here in Winnipeg, and following not only just real estate activities across Canada, but focusing on just what's happening in the world and other things with our economy. I'm very excited to see what spring has in store for us. I think that um, my strategy is going to be, sell the things that I have available that I'm working on right now, and just stock up on some new inventory with a major focus on actually liquidating my rental portfolio. Um, I've owned a lot of these rentals for at least 4 to 5 years at this point, and I think that the timing couldn't be any better. With the market kind of moving up, or at least trending upwards, and then being able to sell into the new all-time highs that I'm expecting to see next year. Um, yeah, I'm pumped about it.
That's awesome.
Yeah,
I'd like you to elaborate a little bit on the selling the rentals, because there are a lot of landlords that listen to us. Um, and
yeah.
there are many people that I talk to that are actually purchasing rentals, or looking to purchase rentals in the near term here. Do you want to explain to everybody a little bit about why you're choosing now to take chips off the table as opposed to holding for another mortgage term or another arbitrary tenancy length of time?
Well, for me personally, I think that it's more of a play to improve the cash position in the business, because I found that during 2020 and 2021, when real estate was seriously like the most talked about thing, when you guys start to go into rooms and you start talking to people, and people who have no business talking about real estate and investing and things like that start talking about it, it's probably like too late to get into the market. You need to be careful at that point, I would say. And so with us being just on top of things now and having a pulse on the Winnipeg market, I think that me moving into a better cash position is going to allow me to take advantage of the next time that there is going to be a dip, because there will be a dip, right?
Of course.
And whether that's next fall because that's just seasonality, or if that's in the next 2 to 3 years because of X, then I'll be ready for that. Um, if I if I was in a position where, maybe keeping a couple rentals doesn't seem like too bad of an idea, I'd probably hold on for another mortgage term. But I like the idea of having real estate pretty close to paid off with low loan to values, or just owning property in cash. And so, it's a long game. And yeah, I think that the choice to do that is more of like a strategic one. And taking chips off the table every 5 years is a great is a great decision, because generally you paid off, a decent amount of equity. I think it's like 5% a year usually, right? If you're on a 25-year amortization, it works out to like 5% a year you pay off.
Well, the nature of amortization is that it changes actually based on the term, and you pay
Okay.
off slightly more over time, but on average, that may be correct. But um, I understand your point. So
Yeah.
consolidating is a huge theme of what you kind of described to me there, where it's like you still want to be in the rental game, and you're still obviously very exposed to real estate as somebody that trades the market but also owns property. But I think from, first of all, a property management perspective, and second of all, a risk perspective, taking equity from a lot of doors and pouring it into fewer doors is a very safe way to go about it. So I think for those of you listening at home or in the car or wherever you happen to be right now, um, the lesson that I think those of us who are in the real estate game during the pandemic have begun to learn, and are now popularly talking about on podcasts and other forms of media is it's not always the case that the more debt, the better. And it's the people who are able to keep their leverage lower that will do better no matter what the market does, and get all of the wonderful benefits that come with owning real estate, whether that's as a primary residence, a rental, or however you want to do it. Um, I wanted to talk a little bit too about some of the other things you brought up with geopolitics in particular, because from the macroeconomic perspective, November was pretty much a whole year wrapped into 1 month. And
Yeah.
I did talk about this in the article a fair bit, but we had interest rate cuts and guidance of future interest rate cuts. We have an impending expected interest rate cut in the United States. We had a historic US presidential election won by Donald Trump, accompanied by tariff threats, ongoing financial discourse with the BRICS countries, that is Brazil, Russia, India, I forget, China and Spain, I think. I forget, something like that. But there's a bunch of currency related discussions going on with those guys and gold and how it relates to that. Kind of part and parcel to that, we had Canadian dollar fluctuations. The dollar's at the lowest point it's been since the very start of the pandemic. We've had a remarkable rally in both the stock market and the cryptocurrency market, which, as I've alluded to over the years, often ends up just putting more capital in the hands of people who eventually buy real estate towards the end of the
Yeah.
cycle, which is something I do not think should be overlooked or underestimated. And possibly most interestingly and notably, these two are kind of part and parcel, but I've been reading a lot of discourse online about the absolute collapse of the condominium and new build assignment market in the Toronto area, which doesn't sound like it has anything to do with the Winnipeg market watch kind of nature of what we're doing here. But I do think it is relevant in really one particular way, is that if developers in that part of the world, in our country, are losing their shirt, action will be taken to make sure the losses do not get too severe. And another theme that I feel like a broken record sometimes. You guys leave a comment if you're tired of me talking about this, but I've said this a million times. I've written about this a million times too. Winnipeg is indirectly receiving steroids from the federal level down. We don't need them. We are like a bodybuilder who has been a lifetime natural and is benching 225 for 12 reps consistently and having chicken and rice and protein shakes every day and is super good and strong and healthy. And then all of a sudden, somebody sneaks up on them and puts a bunch of anabolics in their smoothie. And now they're doing 315 for like 10 or something like that. And was it necessary? No, it probably wasn't. But it was for other things. Other parts of Canada are going to be impacted by this. And Winnipeg is special in that we were already a very healthy and very stable market. And as we become more and more financialized with pressure put from above, like government level down, the price increases in our city are inevitable. And I've made a huge thesis about this back in 2022. And I'm trying not to pat myself on the back too hard or to give myself an early congratulations, but I've been saying since 2022, the next all-time high is spring 2025.
No, Keenan, I think you should give yourself a pat on the back there. That was impressive call out for sure. Because I remember having that conversation with you, and you're like, you know what? This looks awfully familiar. Like the whole trend and chart. It was the one thing that was actually keeping me from losing my mind, to be quite
Really?
honest. Oh yeah.
Okay,
That
well,
was
if that's the case, then I'm flattered, first of all, that that was what kept you sane in a very difficult time. Because
yeah, that was crazy.
for those of you listening who weren't in real estate in 2022 or 2023 for that matter, if you're new to the market or if you've just sort of started paying attention to how people are feeling about real estate at any given point, I'd like to remind you guys that this time last year, I put out a report saying that the Winnipeg benchmark price fell by more than 3% in a month. And we are down below the lowest point of 2021 again. And the sentiment citywide was, oh my God, it's all coming down. It's over. And 2022, from what I remember, we weren't doing a podcast then, but in 2022, Denzel, I'd say it was only worse.
Yeah.
So compare that kind of attitude and disposition of the market participants then, where the sky was completely falling. And thank God we had voices like Guy Boudreau, who's been a guest on this podcast, and Brent Fontaine, who have lived through market cycles. They lived through 2008. Guy has been through more recessions in his life than maybe any human being to ever live. And he was the steady hand that said, this is how this is going to go down. And
Yeah.
I would like to mention that we are going to bring Guy back on in January and give him a pat on the back for being so aware of how market dynamics work and how he was able to right course and steady the ship during yet another real estate storm.
Yeah.
But
This is just kind of a comment I'd like to make, and then this isn't this is more about to the real estate investors.
Mhm.
Um, if you are someone who is flipping property or buying rentals or whatever the case may be, when you're building out your power team and having to choose an agent, I just want to let you guys know that it's a massive benefit if you can find somebody who has at least 15 years experience in real estate. I know that generally those guys don't have time for like a rookie. They're already looking for someone who's like established. But if you can somehow get them on board with dealing with you, their wisdom of what goes on in real estate in terms of the trends and what to expect, massive value. That's all I got to say.
Excellent stuff.
Yeah.
And for those of you wondering, I do not have 15 years experience in real estate, but some of the
You kind of.
mentors that I do have,
Yeah.
I rely on very heavily. So I used to joke for years, like guy is now over 40 years experience as a realtor. And so I would often joke like we have a combined 47, 48 years of experience. That's
Yeah.
a little bit disingenuous for obvious reasons.
Yeah.
Um, let's break down some of the supply data here, Denzel. So I'm looking at the charts in front of me, and when I saw the data, just so you guys know, it's often the case that the actual raw data comes out and then the benchmark HPI price gets released shortly after by maybe 4 hours. So I have a little bit of time usually to think about stuff while I see the data before I actually know what the HPI line was. And when I saw this supply data here, where we had 1,400 active listings versus 1,660 last month. And compared to previous years, we're down about 400 listings from both 2022 and 2023 at the same time. I was, first things first, super surprised. But then, second of all, I saw that the average price of these listings that actually sold was $434,000 just about, which is again above the all-time high. And so when I saw that, I thought, holy smokes, like we might see an upward dot in November. And we didn't, but I mean, negative 0.14%. Like, what are you going to do with that? Like,
Yeah.
it's basically nothing for a month. That this time last year, we fell 3%. So
Yeah. That's a big change.
transaction volume being this steady and higher than we've seen any time since November 2021, which I think was actually the busiest November maybe ever, at least on recorded history. Um, I'm looking at this as a very, very strong showing. We're at least 20, if not 30% better than any time over the last 3 years right now.
Yeah, like I'm looking at the numbers too, Keenan, and that's not a whole lot. Like that's depending on the price point of homes, that's what, another 4 or 5 houses, maybe. See here, you can
Something
see
like that. Yeah.
I'm just looking at the difference between the 2021 dollar volume versus the 2024 November dollar volume, and it's not very different.
No, not at all. Obviously, the
Yeah.
average price is very significantly higher, but if you're just
Right.
talking about like real estate that got moved, like yeah, most stuff is selling. It's not quite the way it was then, but um, as we've discussed for a long time, at this 2024 market cycle, I'm just going to scroll back up to the HPI chart. For those of you listening, this is all available on winnipegmarketwatch.substack.com if you want to follow along with the visuals. But looking at the line chart specifically, the movement of this year and this cycle from the December low all the way up to the June high and then the approximate flat line into December um, isn't identical, but it sure rhymes. And that's why I feel like, hey, we've lived this market before. And not that I've been doing this for a million years, but I talk to people who have been doing this for a long enough time that I'm actually a little bit concerned for them. Sorry, guy. I love you. And 40 years is a really long time to do a job, but you're really good at it. So keep it up. But when I talk to those people, their feelings on the matter are, yeah, I've seen this before too. It always means that the next year is just completely an absolute gong show, and expect crazy bidding wars, expect rapid pricing increases, expect virtually nothing to sit on the market, and an extremely competitive buy side situation with a lot of stress for both the purchasers themselves and the realtors representing them, trying to get them in the door of something. And you know what? We can break down exactly how that's going to look, but when the people who have been around for a long time are feeling that way, and the data indicates to me that that looks the way that it is going to be, that's huge. And that's really the heart of this whole podcast. Like, if you guys want to stop listening now, like, go ahead. But just kidding. I appreciate you'd stick around.
Yeah.
Yeah. Anything to add to that, Denzel?
No, I think you hit the nail on the head on all those points. So
Fabulous. We're going to talk a little bit about just citywide absorption. I know that you like this chart a lot, Denzel, the one where it shows every year for the last 20 years the level of absorption, where it talks about it in terms of how many months it takes to liquidate the market. And usually this spikes into buyer favored or at least balanced market territory in the winter months, and dips deep into seller favored territory during the spring and summer. This year, for the first time since 2021, it looks like we are unlikely to return to an even balanced market, and we are going to remain seller favored for virtually the entire calendar year. And that's all property type, by the way. So that means there's no safe haven in condos or attached homes or whatever you want to call it. That's just in aggregate where we're at. And you can betcha, if you look at detached homes only, that situation is even more a seller's market than you might expect. But Denzel, I know you've mentioned a few times that you really like this chart.
yes.
When you look at it right now, what are you thinking about exactly? And does this give you any information that we haven't already elaborated on in this episode?
You know, just like every other, I mean, it's kind of been in a seller's market for, you know, I would say the past 6 months. And what this tells me is that if, again, anyone looking to sell their house right now, it's a good idea. Um, with a lack of inventory, a lack of new inventory, especially in the month of January and February, because most people, most real estate agents, they'll advise for their clients to, let's just wait until the spring. And the spring is arguably probably March, April, May. And that's usually when people will, bring their property to the market. And I always have thought that January and February are actually really good times to list, because you beat the rush of listings during that time, and you're standing alone in an area where there's nothing to buy and everyone wants to buy. And, you're poised for a good outcome as long as the listing is good. I remember just like, well, in January of this year, again, I'll just Pembridge, 100 plus showings, or what was it, 60 private showings, 100 groups through an open house in like the second week of January, guys. And I can say that it's probably going to be the same story this January, judging by that chart. And as the days go on in December, like, we're just going to continue to see this trend go deeper and deeper into seller territory until it obviously starts to turn around. But I'm excited for that.
Mm-hmm. And I do think that could be a while, by the way.
Yeah.
Like, until something indicates that the party's about to stop or something happens, there isn't a whole lot for me to look at least as far as Winnipeg's concerned, and be worried about, oh, is this going to turn, at least yet? But obviously markets can move pretty quickly, so we will talk about it when the time's right. Now, last November in 2023, we saw only about 21% of houses sell over the asking price. And this November, we're seeing almost 33% selling over list. Additionally, we talked about how we had some really good outcomes in January and February. And this year, those numbers were actually pretty similar to the way November is right now. Denzel, as somebody who has listings that you are planning on bringing to market in both January and February, what are you as a seller thinking about in terms of your pricing strategy to either A, generate multiple offers, or B, price your property at some amount that you can live with and negotiate downwards?
Um, so far with the conversations that I've had with the people that are going to be involved in these transactions is we're probably going to go about 10,000 under what we feel like it's probably worth, and and hope for a multiple offer situation. Because one thing that I've noticed, especially in this fall slash winter market, people are used to going into a situation where there's going to be likely two to three other people bidding on something. And so when you price it in such a way that is, you know, increasing the chances for that to happen, most buyers are like, okay, well, it is what it is right now. So
Right.
we're just gonna have to try our best for this place if they really like it.
Of course.
But that's not to say that there's listings that I've even seen that I've been documenting since them being listed and watching how that pricing strategy works out. Whether it's 10K under or at some crazy price, or if it's just full list. And I think it really depends on the house, whether it's a beautiful house and it's everything's done right, and it's the right product, and in the right area, like it'll sell, right? Will it
Mhm.
go multiple offer? Will it go crazy? Is someone gonna blow their brains out? I don't know. It really depends on what the house is, the area, and what's available. But yeah.
It's a great way to put it. And for those of you
Mhm.
listening who might have a property that you're considering selling this year, what Denzel said at the end is probably the most important part of all this is what are you actually bringing to market? And for your
Mhm.
own unique case, the answer could be completely different than for whatever Denzel's specific property that he happens to be looking to sell in the upcoming year looks like. So if you ever have questions where you have a unique situation or a property that you're not quite sure what to do with, give me a call, send me a DM. I'd be happy to talk to you and come up with some kind of plan that makes the best sense for you so you can have success with whatever you're trying to attempt to do here in 2025. Wrapping up the market data analysis before we get on with our prediction section and our kind of year in review segment. Um, we have 26 out of 66 active MLS areas with 85% absorption or higher. And if you go down to about 70% absorption and you start looking at the amount of MLS areas individually that are experiencing that, it's basically the whole list with only a handful of exceptions. So when I wrote this article, I didn't want to go breaking down the same things that I've broken down the whole year, where the same MLS areas are crazy hot. And there's still areas that have had every house sell the entire year long. There are still areas that have not gone below 95% absorption all year once. And honestly, I think a lot of people are probably sick and tired of hearing about it. But as a as an agent and somebody trading in a lot of these areas, I'm running out of spots to tell first time buyers, oh, this is your secret safe haven where you can get away with not doing the bidding war game. They're just it's so uncommon now. And I guess my comment to that and what I want to ask you in regards to this information, Denzel, is as an investor, when you see that most of the highly desirable and high absorption areas are, not really going to be investable because it's just too competitive, how does that make you feel about the value of off-market opportunity and purchasing property
Oh,
away from the MLS?
yeah, when it becomes impossible to buy on the MLS, and believe me, like I still write offers on the MLS. I'm still trying to buy stuff on the MLS. I just I just wrote something this morning. Um, but going back to sorry, I just got a little bit off topic there, but exclusivity for real estate investors is so important, and finding a way to tap into off off market opportunities, whether that's your own marketing strategies. For myself, I do door knocking. I drive around in my car, do driving for dollars. I drop the yellow letter in people's mailboxes looking to buy houses. I'm cold calling real estate agents. I'm doing everything under the sun to just get in front of these opportunities that are exclusive, that I don't have to compete. And it's super important because unless you have these three things, unless you have your own money, it's not borrowed, You swing the hammer yourself, and you do the work yourself, and who knows, maybe even you have another advantage that allows you to keep your costs low. It's tough out there because essentially with social media and the internet, it's made real estate investing so mainstream. You see it everywhere. Let's get rich, let's go flip a house, let's do this, let's wholesale, let's do the burr strategy. There's just so many things that are now in our faces every day. Or maybe it's just my feed because that's all. It's a lot. It takes up a lot of my space in my mind. But it's important that we real estate investors can get in front of these off market opportunities. Very, very important. It reduces our risks, obviously, to buy right.
Mhm.
Um, and yeah, that's pretty much what I have to say about that.
Brilliant. So, for those
Yeah.
of you who are looking at getting into an investment opportunity in real estate, I'd be happy to guide you through the off-market world. It's a little bit, well, actually, it's a lot different than buying on the MLS. But for those of you who have interest in that sort of thing, there are ways that you can secure property in a less competitive manner through the private transaction of real estate, which I can certainly assist in the facilitation of. Um, that's really the entire market review for this month, and I hope you guys found that exciting, because I really do believe that we're in for a really big year next year. But I'd like to transition us to the maybe the more interesting part of the conversation, which Denzel and I are going to talk about a few things. We are going to talk about 2024 in review. We are going to review the predictions that I made at this time last year for 2024 and see what came true and what didn't. We're going to talk about our high points from the last year. We're going to talk about our low points for the next year. And we're going to have a little bit of time set aside for goal setting and making general, like big picture predictions about what's going to happen in 2025. So Denzel, let's let's get started here and just take things back to January. I know we've talked a lot about every single month what happened and how you felt, but as you moved through the year, if you had to pick a point that you'd say was your high point for 2024 and a point that you would say was your low point or your hardest point or the most challenging time for you in 2024, what would those two times be?
I would say that the high point of my year is definitely April and May. Reason being is because we bought a lot of property in January and in February and had some deals also carry over from 2023 in the late part of the year that was available to sell, and we did great on those flips. And obviously when you're flipping a house, the turnaround depends on what the scope of work is, but that's kind of when those deals were wrapping up and we were able to sell them and basically caught the market at its peak, which was great. Um, Now, in terms of low points, I would say that the most challenging quarter this thus far is, I would say right now. Uh, Q4 was always a little bit more of a slower time um, for real estate. Holidays are here. There's New Year's. There's long weekends in November. There's Halloween. There's just so many events in the second in Q4, and I think that in addition to the events, it's also just colder. It's harder to I don't want to go in my car and drive around and be in the freezing cold and drop letters off in people's mailboxes, but I do it. So it's more of like a mental thing because obviously it's a long year. In order to produce a lot of business, you kind of need to have that grit to get out in the car and do it, right? A mentor of mine always says, you don't get lucky at home. So if you're at home and you're not doing the things that you need to be doing to produce the business, you're not going to get anything, right? So how can I be top of mind for some of these people in January? Well, I'm in the car, it's December, I'm going in the morning and I'm dropping off my flyers and doing my door knocking, whatever the case may be. But I'd say that right now would be, not that it's terrible, but my low point would be now. Um, yeah, that's that's what I would say. for myself at
Valid
least.
answers.
Yeah.
Valid answers. And for those of you wondering, the last quarter of the year in the world of real estate is often the most challenging time, because for anyone who touches real estate in any fashion, it's the time where the least transactions are occurring. And that means that anybody who's buying or selling as a fundamental way or facilitating a transaction in real estate, it means that this is going to be a cash light time for many people in the industry. So Denzel, as a trader of real estate, is obviously expressing that. And as a realtor, I can say both personally and from talking to other agents in the community, many of them around now are starting to go, okay, like maybe we have some money still from when there was a lot of stuff closing, but it's time to start being very careful, because there's going to be a stretch here where it takes time to be paid after closing, and that is totally understandable. For myself, my I would say that my high point of the year was pretty much well in line with your high point of the year, which would have been around the end of May, specifically the last week of May into early June. I chose to become a fully independent realtor at that time and separate myself from the team that I had been a part of for about 6 or 7 years. And it was a brilliant decision. I'm super happy with the outcome there. And it was at that time as well that Denzel and I had a ton of property coming to the market, and we were firing on absolutely all cylinders making that happen. So can't say enough good things about that era. But the low point for me was probably a week in mid-April, approximately, where I had a live multifamily deal on the go alongside 4 other pending transactions for both listings and buy-side deals. And I was physically so busy during one of these days that I was not able to stop to eat, because I had to keep my mouth available to talk on the phone. I couldn't shower or brush my teeth. Well, I did shower. I got somebody started on a long rant, put my phone on mute, showered in about 2 minutes while they were ranting over the phone on speakerphone, finished my shower and got out, and then untapped the mute button and answered, and then went about my day. But it was one of those days where from 7 in the morning until about midnight, I did not stop talking on the phone virtually the entire day. And it was, as some of you might know, you don't get to deal with these people one at a time. You're going to be on the phone with somebody having a very hard conversation, and then somebody else is going to call you with some serious problem that they think is the most urgent thing that needs to be done in the world. And you're going to start getting texts from people who are completely not urgent, but like would like a quick answer. And it compounds. And so by the time you finish call number 1, you've got 4 other people that you've got to get back to, and all of them think that they should be the next call. And that to me was the hardest moment of the year. And I don't know about a low, because there was a lot of really good stuff. And like, this is personal matters aside, this is real estate only, because like I did get married this year. So
Yes.
that,
Yeah. All good.
which, which would have still been in June. So that still like lines up with the high point. But
Yeah.
speaking of real estate only, that was for sure the hardest, to deal with an exploding cell phone day in and day out, where there's literally millions of dollars of real estate transactions at stake, and any misstep or any miscommunication or poorly executed phone call could have been, well, catastrophic would probably be the right word.
Yeah.
um let's
That's
talk a little.
everyone, I think. Sorry, Keenan, to cut you off.
No, no, no,
That
no, go ahead. I want you to
description
elaborate on
that,
that.
I was gonna say the description of being on the phone, and it's like call, 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 and having to jump from conversation to conversation, and then your wife calls, and then your brother calls, and it just all gets mixed up. Like it's just crazy. But we asked for this, right?
Exactly. Oh, it's part of the deal. And I'm not
It's
complaining. It's just
yeah,
when those days would come, it's like, holy smokes, like I really gotta juggle. And
yeah,
I felt the pressure at that point in the year, but I live for the pressure.
yeah,
Yeah, you don't just
yeah.
get all of this without like pressure. So
Yeah, yeah. We're built for this. We're built for
absolutely.
this.
But um I want to take a second and just say, like, obviously you had a really successful 2024, and as we've
Yeah.
spoken about in private, you had some really, really fantastic outcomes on a lot of the stuff that you did. Let me ask you this though. When it was December 2023 and you were envisioning the year ahead, what were the kind of things you were predicting the year would look like, and how did the year turn out in general compared to your thoughts? Are you impressed? Do you feel like it underperformed, or do you think that this year in general exceeded your own expectations?
This year certainly exceeded my expectations. There was a point, guys, that in December of 2023 where we were like, for all things considered, I got my ass kicked in 2022 when the market corrected, and then we tried to make some changes, and then I got my ass kicked again. So in December of 2023, I really had to think hard about how I was going to attack this year. And I think if it wasn't for, obviously, I have a daughter, and my mindset and working on myself for all of these years, if it weren't for that, I don't think I would be able to do what I've been able to accomplish this year. With the support from my family, obviously Keenan being my business partner, the support from you, and just matching each other's kind of enthusiasm about business and it being in this business, it's been great. And I had probably the best year in real estate this year in my entire career. Like, this is a record, this is a banner year for me. And I wouldn't have been able to do that with without a lot of the people around me, and I think that what really, I guess you could say, was the catalyst of all of this was being at that low point and just saying to myself that things are going to have to change. And I just made the decisions that I'm making even now. I'm certainly not as risky or of an opportunist as I am today. Um, and I will say that I have I almost want to look behind the curtain of every single opportunity that comes across my desk. Because before I was just like, yeah, let's buy this and buy that, and let's do this and let's do that. But now I'm just like, I've seen this thing before. I know how this is going to turn out. And that's just experience to this point, right?
Of course.
So obviously you need to fail in order to succeed. It's a two-way street. And yeah, like, this year's been awesome, and I'm can't say enough.
I'm really glad to hear.
Yeah.
And I think 2025 is going to be even better. And having obviously been super involved with everything that happened this year, I'm feeling very optimistic in general about everything that's
Yeah.
going on. But I did take the time in December of 2023 to write, specifically on December 28th, 2023. I outlined my full opinion of what I think the market would generally do in 2024. And that article was super well received. It was one of the most read and most shared I've ever written. And my predictions were, in my opinion, incredibly modest. And I greatly underestimated how intense and how high things were going to go. For those of you who are wondering, this can still be found on winnipegmarketwatch.com. We have the full series of articles here, but my predictions essentially stated that we would probably peak between 405 and 410 for the benchmark price, and we would actually pull back to about 390 by the end of the year. And we are currently at least 5% better than that right now. We, at most points throughout the year, accelerated quicker and ended up higher than I thought. And there really materially was not a seasonal pullback at all. So when I go through this, I talked a lot about how there would be immigration pressure and how there would be interest rate changes and how the supply was already lower than it seemed to be based on the numbers when you broke it down by area and product type and desirability, and the prices of new builds being unsustainable and the builders having built pointless products that nobody actually wants for the last 2 years. And all of this compounding into a situation where real estate from the bottom up would push pricing to a level that I thought would be high comparatively. And I actually undershot. So I'm here to say I'm impressed. I did not expect that. I think that the outcome we actually got is fabulous. And on a personal level, I think that I also performed better than I might have expected at the same time.
Yeah.
I also had a banner year, and I'm very proud to say that. And I really don't think I could have done it specifically without you, Denzel, but also for the rest of you listening. If you've ever reached out to me for anything related to real estate, whether you actually transacted or not, whether it was just a call or a DM with a question or a text asking me about something, or maybe you referred me to a friend or told a family member that I did something good for you or helpful for you, I just want to take this opportunity and say from the bottom of my heart, thank you so much for being wonderful. And I absolutely would not be in the position that I am without you. And I do acknowledge that. So, um, heartfelt gratitude. Thank you. And I'm hoping sincerely for a fabulous 2025.
Yeah. I'm sure all of your clients, Keenan, are really going to appreciate that. I know I do.
We'll have to make a reel out of that. So thank you. Thank
Yeah.
you for this, Denzel. Now,
Um,
or go ahead,
okay, sorry.
and
I
then
was
I've got
just
another
gonna say,
question for you.
I was you had mentioned something that you had written last year and just kind of
Yes.
elaborated a little bit. I did something, and now it wasn't in December. It was in it was in September. I wrote this last year, and it was just another new 5-year vision statement that I made for myself because I am somewhat approaching what would be 5 years in the business. And I
Mhm.
do have another 5-year vision statement that I just reflected on. And it's just crazy how much can change in 5 years, like your vision is constantly changing, like the things that I talked about of what I would possibly have at this point in my life was crazy, but you got to dream big. Um, but yeah, I'm not going to read it out loud because some of this is a little bit personal, but yeah,
Fair
I
enough.
think this is just for some of you people, in terms of like anyone listening and trying to set some goals, maybe try putting together a 5-year vision statement for yourself and try to see where your life or what your life could look like, what you want it to look like in the next 5 years. Date it and then read it every day. And it keeps you focused on that.
Absolutely. I've been writing goals down pen and paper since, well, as long as I can remember. But
Yeah.
I've been keeping the papers yearly since at least 2018, and I still have them in the drawer beside me here. But I think that for those of you at home, if you really want to make a positive change to your own life and to figure out what your priorities actually are, take 30 minutes at the end of a year, write down the 10 most important things to you, set a goal regarding some outcome related to those 10 most important things to you, whether that's family, fitness, food, finance, real estate. That's a lot of F's. Um,
Yeah.
or whatever else it happens to be. Set a goal based on them and then check back in June. And if you forgot that you set a few of them, that probably means you don't care as much about that thing as you either probably should, or maybe that thing really wasn't that relevant to begin with. Maybe you set a goal for some fleeting hobby that you weren't really that passionate about, and it doesn't matter that much, honestly. But maybe you set a goal and you're really, really pushing towards it. Maybe you already even exceeded it. The point being is it helps you figure out based on your own behavior what your priorities actually are instead of what you're saying your priorities are, which is a funny psychological trick because it's usually the case that behavior is indicative of your own beliefs and your own desires more so than what your actual spoken word is indicative of your personal beliefs and or desires. So highly recommend that. I think that it's a brilliant way to self-organize and to allow that self-actualization to occur that you want to gain by setting the goals in the first place. So with that little interlude aside, um, Denzel, you want to take a second here and break down 2 or 3 of your real estate goals, or you could share personal goals as well if you are so comfortable with all of our listeners here, and let us know why you think that that's something you want to achieve in 2025.
To be quite honest, I actually haven't really had a chance to think exactly what um, my goals are going to be for the new year. But I'm, like I mentioned earlier in this episode, I'm going to focus heavily on looking at my rental portfolio and treating those as deals that I have that are going to be flips.
Mhm.
So that's a huge goal for me. You know, I really want to reduce the amount of rentals that I own next year. I don't know. I still need to talk to my accountant in terms of tax strategy and stuff like that.
Mhm.
Whether or not it would be a wise decision for me to sell, you know, north of $5 million in real estate in 1 year and then all personally owned. So that's something I definitely need to talk to my accountant about. But do at least selling, I think, is a good goal for myself in the new year. You know, that's at least 1 to 2 properties every quarter. And then I I have been doing a lot of the wholesaling this year, and I think that I'm going to probably um, focus more on building out that part of my business further. And when it comes to the flips, one thing that I like, unless the price is good enough to be, you know, at a sale price of somewhere between 400 and 450. I actually like the idea, and Keenan, maybe you could give me your thought on this, is when you sell, when you buy a property and your ARV is somewhere between, let's call it 550 and 650 or seven, I find that there's a lot more room to like do a good job and not just do a quick splash and dash and get out. Um, and when I say a good job, I mean you could really have the budget usually to make it a properly working fun, like properly working home. I found that in the past 6 months, a lot of the flips that I did, part of it is market timing, and part of it is just, you know, because I usually will hire a general contractor. I'm always butting heads with the GC about price and budget, etc. Um, it's hard for me to really get those costs low for flips, you know.
Mhm.
So I want to be able to get into some of these. Uh, I guess they would be high end, right, for Winnipeg flips, and maybe do four or three of those. Just bigger projects where I could just, you know, focus on that while also doing the rentals as they become vacant. Um, is where my focus is mainly going to be. So to summarize that for those of you listening is building out my wholesaling business further. I'm going to be liquidating at least half of my rental portfolio and then execute 3 flips that have sale prices between 550 and 700. Obviously buying right. You know, we're not going to buy for five and then sell for seven.
Just buy
Um,
it and sell it again.
just
Yeah.
buy it and sell it again. You know, that's not the point. But and then from a personal standpoint, and it's funny, I've been saying this all year. I've been really wanting to um, get in better shape. I think while I am fit and I'm healthy, I know that there's some discipline that I should have when it comes to eating maybe a whole box of pizza randomly in the week to myself. Like I probably shouldn't do that. And then in the same day, also have some shawarma and maybe some fried chicken or something. Like I need to get my diet in check a little bit. But hey, it's a stressful business sometimes. You gotta do it.
It sure is. And
Yeah.
I'm guilty of inviting you to the shawarma at least, but um,
Shawarma
understand.
delight.
Yeah,
Shawarma delight, everyone. If you guys want the best chicken shawarma in Winnipeg, we're not sponsored, but it's shawarma delight.
it is. They're on Portage Avenue and they do a fabulous job. Denzel's a
Yeah.
huge fan of their garlic sauce, and
Oh,
I'm not so much a big garlic fan, but I even think that sauce is delicious, and the
yeah.
crispy pita is fabulous. So if you guys get the chance, stop on in. It's just a little shop, but you're going to be happy about what you receive. Especially the value is, in my opinion, really quite staggering.
Yeah.
But those are some great goals, Denzel, and
Thank
I
you.
think that they're all completely achievable. And I think that you will probably at this time next year look back and go, yeah, I did that. I'm fitter. I executed my strategies appropriately. You scaled where you needed to scale, already leveraging the things that you know you're good at without doing the crazy like I never want to be a podcast bro who starts saying like, "Oh yeah, I've got these like 9 or 10 ideas and they're all crazy and they involve AI and they involve waking up at 4 in the morning and reading 30 books a day and doing this, and this." And then eventually one of them is going to succeed and I'm going to become a millionaire because I just did all of these wild things at once. And now I'm going to go and make a social media account and call myself founder of Shitco Incorporated and sell courses on how to be shitty to people on LinkedIn for the rest of my life. Like, I don't like when
No.
people come to me and they say that kind of thing. So for you, like your summary of your strategy and your goal setting for the year is do what you're already doing well, even better. Be fitter, be smarter, be leaner, be sharper. And
Yes.
I think if more people set goals that way, um, they would succeed a lot more. And I don't mean succeed in that they'd meet their goals because they set them too low. Don't misunderstand, listeners. I mean, they would succeed more in that the gains that they make on a yearly basis would compound more effectively over time, and they would find themselves with fewer setbacks over the course of a lifetime. It's the people that really swing for the fences that tire out and just give up, or
It's a
people
long
that do
game.
chaotic nonsense actions hoping to find something don't usually, I find, succeed. But
Right. What about you, Keenan? What's your
yeah.
goals?
Well, I've still got some thinking to do on a lot of this. And I
Yeah.
usually take the time between Christmas and New Year's to really pound out exactly what I think is going to be the most important to me. But in short, there are a few, and they're really along the same vein as yours. So don't think I'm a copycat. This is just what I was able to come up with so far. But first things first, I am every day trying to be a better realtor. And the way that I do that is I try to be more responsive to everybody than I was the previous year. So if my old response time was 20 minutes, I'd love to make it 18. And my plans are to do that by being up earlier to take care of everything that I need to take care of personally throughout my day, staying up later on days where I know that it's going to be relevant to do so. I want to be more engaged with the people that I'm working with and spend more face to face time with all of my clients, especially Denzel, but everybody else in my world as well. So I think, first of all, you're going to see a lot more of me on social media. You're going to see my face. Hopefully, you like it more than you might be used to, both in person and online. And that's going to be my best way of getting engagement from everybody. Additionally, some of you may know that while I joked about it earlier, like 5 minutes ago, I do read a lot of books. And I would like to continue the compounding of my knowledge by reading. But I think I'm at the point now where it's going to be more valuable for me to start rereading some books that I've already read and reduce the number of new books that I read for the first time. So part of my 2025 plan is if I'm going to read 24 to 30 books a year, which is something that I've done for a while now. I used to do actually a lot more, but I had a different job that allowed me the time to do that. I am going to try to make sure that at least 3/4 of those are books that I've already read. And I feel like that will help me reiterate a lot of the lessons that I probably should have top of mind, especially for a year that I'm expecting to be really busy.
Mhm.
Regarding fitness and the like, I also have been enjoying some snacks. And I also have probably not been spending enough time in the gym because I've been really busy being a realtor and being a husband and being a brother and a son and a member of a family and a friend. So I am going to make a concerted effort to do a few things. The first of which is I need to actually get stronger for the first time in a while. My lifts have been stagnant for about a year, and it's because I haven't pushed as hard as I should have in the gym. At the same token, I'm going to take a completely opposite direction, and with Rashawn Brown, who was a guest on our podcast here very recently, I think maybe even last episode. Um, with him in mind, he has been a huge influence on me in getting into running. And I am planning on running a half marathon next year, which is huge for me because I've never really been a runner. I am attempting to play a sport that I know I'm bad at, which is not something I've spent a lot of time doing. And I'm doing it alongside somebody that played university level basketball for a significant length of time. And I'm not an endurance athlete, so this is going to be very interesting. But those are currently my very big, major, big picture goals. Is just like you, I want to do all the stuff that I'm currently doing even better. I want to be in front of people more in person, online, etc. I want to be fitter, faster, better in my personal life. And probably the last thing that I'd really, really like to do next year is execute another large multifamily transaction. And I'm not quite sure how I'm going to do that yet, which means it's not a very good goal because I don't have a call to action to make it possible. But in the back of my head, it's rattling around that that is something that I would like to do more of into the future. So
I guess we're buying apartments.
yeah, well, I suppose so. So if you find a deal there, then yeah, I would love to get involved in that because it's something that I'm very passionate about and I think I'm good at. But I'll let those of you out there be the judge of me for this. But any comments on those, Denzel? I know they're not the same as yours, but they sure sound similar to me.
Yeah, like I said, I think that's the goals that you've set out for yourself. Um, not having the shiny ball syndrome and just shiny object syndrome, sorry, and
Yeah,
just kind of doing a bunch of things is gonna not a good strategy at all. Just focus on what you're good at. If there's anything that I learned personally is focus on what you're good at, double down on that, and just be awesome at it. If you could crush it and you're the absolute best you possibly can be at the few things that you do, you'll get paid for it. And so for you, it's negotiating, negotiating. It's what we do. It's what we do all the time, right?
fair
So
enough.
yeah, I really like those set of goals for you, Keen. It's a great set.
Fantastic. That's really happy to hear. Last thing, this is going to be a quick question because we're almost out of time here. I know you've got a lot to do, and I know that you've got a vacation coming up, which I hope you're excited for. But let's take a second here, and without any huge detail or over elaboration, how high do you think the Winnipeg benchmark price is going to get in 2025? If you had
Well,
to, like, just eyes closed, say, this is what I think, and a couple sentences why, how high are we going next year?
450, I think.
450.
450. 450 to 460. Yeah. The peak.
Okay.
Yeah.
That's an interesting guess. That's basically 10%
Yeah.
from here.
Yeah.
So
That's what I mean, not that, yeah, I'll leave it at that. No comments, just 450. That's my thought. What about you?
50, 472.
If it goes to 472 and we have and we hit the bid on all of our flips, we're definitely taking an early vacation next year somewhere with the
It sounds
families.
good. It
Yeah.
sounds good. And I say 472 for those of you at home, that's basically a 15% gain from here. And
That would be massive.
I do think it's going to happen. I'm going to let this rattle around in my head a little longer. I might change my mind. I probably won't, but I'm going to let this rattle around a little bit and figure out why. But I've had in my head that we're going to see a 15% gain this year for a while. And we've seen a couple years where 10 has just happened and nobody really cared. So I
Mhm.
think we're in for some headlines next year. And I think headlines are going to take a little bit of extra juice. So
Yeah.
472 is my number. I'm going to write it on a sticky note and put it somewhere. And then we'll talk about this a lot more. And
Yeah.
if you guys are listening to this in the future and like there was a huge recession in 2025, completely bombed, like I want you to comment like a very creative insult with the lowest amount of profanity possible in the comments section, roasting me for this prediction. But that is what I think at this time. 472 will be the peak benchmark price next year, in my opinion.
Yeah.
And
We'll
and
see
we'll
what
see.
happens.
You know,
We'll see.
that's how it goes. This has been a really fun episode. It's always nice to talk to you one on one. When I love the guests that we have, but I think that it's always enjoyable for me to talk to you directly and have a little bit more of a dynamic this way. So I
Yeah,
hope you enjoyed this too, Denzel. But
absolutely.
any closing thoughts for our listeners here as we obviously are signing off for 2024? We're going to see you guys after Jan 1.
if you're still on the fence about getting into real estate, I think that right now is a really great time to learn as much as you possibly can about it. YouTube videos, read books on finance, um, book some meetings with some other real estate associated people, agents, investors. Just get in tune with what's going on in Winnipeg, because had I had someone who had a podcast like this available from when I was first getting into the business, I would be way further ahead because of all the information that I and yourself, Keenan, have been able to provide. And it being in Winnipeg, there's not a whole lot of people reporting on Winnipeg like this, and I know that for a fact. So we are the pioneers, I guess you can call it, of the Winnipeg market updates and kind of investor realtor focus kind of thing. And yeah, if you are looking to get into real estate, whether you are an investor or if you're just a person looking to buy or sell, next year is going to be a great time for all of that. So um, take this month, learn what you can about it, and just jump in.
Fabulous.
Yeah.
I couldn't agree more, by the way. So, for those of you out there, if you've ever considered real estate in any capacity as an investment, or maybe you're just looking to buy a home or some combination of the two, now is the time to learn. Taking action today will pay huge dividends tomorrow, whether or not you make a purchase today. But the level of understanding that's going to be required as we continue along the lines of financialization in this industry, the power is going to go to the hands of the people who know. And the people who
Yeah.
don't know will be left behind. So if you're listening to this, you're already ahead of the game. Let's work together and get you where you need to be so you can meet the goals that you hopefully have set for yourself next year and every year after that. But without further ado, in that case, I want to say thank you again, guys, for being with us for 12 episodes here. I want to say thanks again for listening to us go on about all of our lives and real estate matters for the last hour and however long it's been. And I am sincerely looking forward to seeing all of you in the new year.
Awesome.
Okay.
All right, guys.
We'll see y'all later.